Good afternoon, everybody. It's going to be our Summary Markets episode 165. As always, we're going to start off with the calendar. Then we're going to move on to ES, NASDAQ, Bitcoin, Ethereum. We're going to talk about oil and then close it up with the dollar and the euro. So, starting off with the calendar, pretty lackluster as far as news goes this week. Not a whole lot happening. Definitely not as active as last week. Starting off with Monday, we have the Empire State Manufacturing Index at 8:30. And then we have an ECB president speech at 11, which will impact the euro, so it might push the dollar around slightly, but that's as far as that goes on Monday. So Tuesday, we don't have a whole lot going on, basically just housing data. We have the building permits and the housing starts coming at 8:30, and these will actually be a little interesting. I've been keeping an eye on the housing market in my area, and we've been seeing like 500, 600K houses going in less than 24 hours, even with the obscenely high mortgage rates. So it seems like people are very aggressively buying, like they were even when the rates were around 4.5%. They're at like what 6.5, 7% now, and we're still seeing these very large purchases. And I'd say less than 48 hours to a week. So pretty aggressive there. So keep an eye on that. That's going to be coming out at 8:30 on Tuesday. Wednesday, basically nothing happening as far as news goes. We have a Fed speech at 7 p.m., which is after the bell, after the closing bell, I should say. We have the Beige Book at 2 p.m., and that is pretty much it. Moving on to Thursday, we have unemployment claims at 8:30. We have a couple of medium impact events with the Philly Fed, Fed speech at 8:45, more housing data at 10 o'clock, and that is pretty much it. We've got a Fed talk at 3 p.m. right at power hour. Moving on to Friday, lots of high impact data for the euro, so that could impact the dollar. That's going to be around the London Open around 3 a.m., so keep an eye on that if you guys are trading pre market. Moving on to 4 a.m., more data for the euro, so we have more PMI coming out around 4 a.m. And then 9:45, we have some high impact data for the dollar. That's going to be the PMI manufacturing and PMI services data. So that is probably the biggest event, the biggest data point for this week. So keep an eye on that on Friday at 9:45, just after the bell. All right, moving on to ES here. Let's take a look at some levels. So before we go down into the weekly and the intraday, I do want to take a look at this grand scheme inverse head and shoulders that we got going on here. So looking at this inverse head and shoulders that we talked about the past few weeks, you can see we have kind of a double right shoulder there, kind of a double left shoulder, and then we have the head there. Excuse me. We do have the neckline trading around that 4,200 to 4,300 level. So that is the key level to watch for this week. If we can trade above that 4,200, which is really only 40 to 50 points away, let's look for some daily closes above that level, and then even a weekly close. If we can close above that 4,200, we're starting to look pretty bullish. So if you guys are longer term traders, if you guys like to look at the daily, the weekly, the monthly, whatever it may be, definitely keep an eye on that 4,200. That's kind of the line in the sand for the last year for the long-term traders. Going back to the start of 2022, we can see it kind of put in that massive support there, turned into resistance, and we've been kind of waiting to break it ever since. So dating all the way back to the start of 2022. Pretty long-term level there. We need to crack that 4,200 to 4,300. I think once we do, we could be entering that territory of kind of the up-only market where we're looking for the buy the close, sell the open type of a market. All right, let's take a look at the weekly profile here. So 1, 2, 3, 4, 5, going back to Monday. There we go. That is weird. It should not be doing that. Let's go ahead and move this over here. Sorry, it looks like it changed my colors. Give me 1 second here. Okay, that should be fine. Let's go ahead and grab some levels here. We're going to grab the value area low. We're going to grab the value area high. And we are going to grab the POC here. And make sure we make these dashed or dotted just so we know that this is a weekly level and not a intraday. All right, going to the intraday levels here. Let's grab any untested value. So it looks like we have Friday's value area low. We can mark out Friday's value area high just so we know that that's kind of the trigger point for the upside. We can also mark out Friday's high. And let's mark out the low of Wednesday. And then we have some untested levels that we had prior to this week. So we don't have any marked out levels above this 4,200. So let's go ahead and look for some levels to the upside. We do have to go back on the daily here. We're going to grab this high going back to February 2nd, which is around 4,208. And then realistically, we don't have any levels until we go all the way back to August of 2022. So let's grab a little volume profile of this distribution here. And we'll grab these value levels. So we have one trading at 42.48. We have one trading at, let's see here, 43.05. And then let's grab the high here as well. That high is going to be 43.28. That should be good for the upside. Let's go ahead and reset. And let's take a look at where those line up on the intraday here. Okay, so it looks like if we can break and hold above, what is that, Friday's high, holding above 41.90, looks decently bullish into this next high around 42.08. And then breaking that level, we start to get some very strong impulse targets all the way to 42.50, going to 43.27. So realistically, we need to see a daily close, I would say above 4,200, 41.95, somewhere around that area. And that could trigger the next impulse into these higher levels. So going into 42.50, 43.05, and then 43.27. Now that's going to be a pretty big climb. That's going to be what? About 1.25%, 2.5% to 3%. So most likely we are not going to see that next week. We'll probably have to keep these targets moving on to the next few weeks. But you never know, right? We could have a massive breakout if we see some buy pressure above that 4,200. So we'll keep our eye on that. But realistically, the target for next week would probably be around this 42.08, and then the high side target would probably be around 42.50. But definitely keep an eye on that high around 4,200. To the downside, if we start holding below the weekly POC, I'd say around 41.40, that would start to look a little bearish, possibly into Wednesday's low around 41.10. And then if it gets very bearish, possibly down to 4,100, where we've been seeing that very large buyer support the past few weeks. They've been retesting 4,100 a few times, and almost every time it goes down there, you see quite a bit of buyer delta start to come in and push it back up. So if we do get back down to 4,100, I wouldn't immediately be bearish. I would actually be looking for that buyer delta to step in, possibly getting another bounce off that level. But realistically, the trigger to the downside would probably be the weekly POC around 41.40. All right, moving on to Bitcoin and Ethereum. Bitcoin finally broke out of that little distribution that we saw for quite a bit. Had a nice breakout candle on Monday, and then we've been climbing ever since. So it looks pretty good here, to be honest. Just needs to hold back above that breakout point above 29,000. So any pullback here, as long as it holds above that breakout point, which once again, 29,000, we do look pretty bullish. Now we do have a slight kind of rising wedge, rising distribution here, and typically the textbook would tell you that these are bearish, but funny enough on Bitcoin, a lot of the times these rising wedges actually break out bullishly, kind of like what we saw here. This was more of a horizontal, but typically if you see a pattern like this where it's very choppy sideways, very choppy to the upside, Bitcoin actually likes to break that to the upside. So keep an eye on that. This does look pretty bullish above, I would say, 31,000. Above 31, look for the next breakout point around 32, or sorry, the next impulse target around 32.6, which would be an old Fibonacci level, which also lines up with this old accumulation dating back to May of 2022. I know my chart's getting a little messy here because we have multiple fibs going on, but really what you want to pay attention to is this level right here, so kind of around that 31.4. If we can break above that, we have an old range, and then we have some Fibonacci targets around that 32.6, 34.1, and then 35.3. The level to the downside to really start getting bearish is if we do pull back and retest that breakout point, but we start to hold some daily closes back inside that distribution. If you start to show some daily closes back inside that range, typically it likes to sweep the low, so you would probably look for around 27.1 or around 26.4 in that case. Moving on to Ethereum. Ethereum looks really strong, much stronger than Bitcoin. And if we go back to the weekly, you guys might remember, if you guys have been watching my weekly trade plans, we've been talking about this weekly range for quite a long time here. We've been stuck in this range ever since we started it back in June and August of 2022. So we came back down and retested it there, and now this will be the first major retest of that weekly high. But we're actually breaking through it quite easily on that weekly candle there. This weekly candle closes in about 8 hours. So let's see if it closes above this 2030 to 2000 level. If it does, we actually look pretty strong to start reclaiming this value right here, which sold off way back in April and May of 2022. So what we can do for some targets to the upside, we can grab this little section right here as a volume profile, and we can kind of see where all that value is being traded. So we have a nice little node right here around 2400. We have a pretty big LVN zone in the middle there, and then we get to another major node way up here around 28.8. Obviously these levels are pretty far away. We're looking at a weekly chart, so if you guys want some shorter term levels, you would have to go down to a daily or maybe even lower than that. But for now, the weekly levels look like 2400 to around 2900. And then in between that, you could reclaim that pretty easily because we don't have a whole lot of value trading inside that zone. Okay, let's go back to the daily here. And what we're going to say on the daily is as long as it can stay above this weekly high here, this 2030 level, it looks decently bullish. If you start to lose this 2030, this starts to look more like a weekly deviation, possibly going back to the daily support around 1940. And then if we lose that daily support, you're looking pretty bad, possibly back down to that 1740. Okay, so first bearish trigger would be losing 2030. Second bearish trigger would be losing 1940. For now, as long as it stays above that 2000 to 2030 level, I think you are leaning slightly bullish. Now, for the shorter term guys, if we go to, let's go back to the daily for a second. If we look at this as more of a micro pullback, we can mark out these levels on this doji. So we can mark out like the previous high there. We can mark out the previous low there. That creates that little micro pullback doji. We could go down to the 30-minute and we could say, okay, if we start to hold our daily close above that level there around 21.12, we look slightly bullish. If we hold our daily close below 20.74, that would be kind of a bearish trigger going down. Anything in between, you are stuck in a distribution and it's going to get very choppy. As we see here, a lot of chop. You can see they're buying the lows and they are selling the highs. Looks like it's leaning slightly bearish. You are putting in kind of these lower highs here. But overall, you're just kind of stuck in a distribution. All right, let's move on to oil. Then we will close it up with the dollar and the euro. So moving on to oil here, oil still looks slightly bullish. We are leaning above that 81 level, back above that range high. So as long as it stays above 81, you're looking for that little micro gap around, what, 85 to 86. If you do start to lose 81, look for that gap fill to the downside, which also lines up with the middle of the range around 76. So for now, I would lean bullish above 81, kind of the same scenario that Ethereum's in. You're right above that range high. You just need to stay above it. If it starts to lose it, then it becomes a deviation and gets bearish again. So stay above 81, look for 86 there. All right, last but not least, let's talk about the currencies here. So the currencies have really struggled to maintain their correlations. So the correlation is once again very weak. We were looking like we were going to reclaim that correlation last week. It was, what was it, around negative 0.7, I believe it was. But then it dropped all the way back down to negative 0.3. So until you start to trade kind of in that negative 0.7 to positive 0.7 area, you're not really looking at a tradable correlation. Okay, so anything in between is a weak correlation that we can't really use in our ES trading or index trading. So looking at the dollar, we are sitting on a major support here around that 100.8. If it loses that level, you could sell off pretty hard here, back down to 100 even, or even 99.4. If it does start to sell off that strongly, I would expect the correlation to start coming back on ES. But like I said, we can't really trust it right now, so I would not bet on it bringing that correlation back. If we do start to hold back above this previous low above 102, look for it to make a higher high. You have not been able to put in a higher high for quite some time here. So even if it does bounce, I would not be too bullish until we put in that higher high. In this case, it would need to break the high above 102.80. All right, last but not least, let's talk about the euro here. Same thing, correlation is very weak. The euro is in a pretty bullish pattern here. You are putting in a high, but it is a higher high. So as long as it maintains that higher high formation, you are looking pretty good. We don't have any levels currently to the upside, so let's go ahead and grab some levels here. I would be looking at this previous high dating back to what is that, March of 2022, pretty far away, but that's realistically the only major level that we could grab here. And then obviously you would have to go much higher than that for the next level. One of the key levels you want to keep an eye on here is actually this high around February of this year, because we're creating somewhat of a deviation. We tried to break that high with this Thursday-Friday candle, but now we are closing back below that high. So it's getting a little weak here. If it does start closing back below 109.8, look for it to make a lower low, breaking that 108.7 level. Same thing with the dollar. It looks a little bearish for now, but we have been putting in higher lows and higher highs. So it doesn't matter that it's pulling back here. It's still maintaining a very bullish trend. If it does start to lose that low and put in a lower low, then you could start to look pretty bearish in that case. But all right, guys, that is it for the summary markets. Hopefully you guys enjoyed this video. If you did, hit that like button. It does help a lot on YouTube. I will be streaming this week, Monday through Friday at 9:30 in the morning, as always. So if you guys want to stop by for our live stream, I will see you guys at 9:30 tomorrow for the first one of the week. But all right, guys, if you guys are new here, make sure to subscribe. I will be seeing you guys tomorrow for our live stream. Have a good rest of your weekend. Peace.